Right, so let's kick off with the weekly market brief. Volatility, absolute mayhem, turmoil, and sell-off in risk assets across the board. So firstly, let's look at oil. This is the daily time frame. Yep, last week I was expecting it. What I could see was a move up to from $84, a move up. However, due to the risk-off sentiment and the turmoil in the markets, there's been a strong breakout in oil, and oil's absolutely dumped hard this week. So from the weekly market open of 82.64, it's been a 13% drop. We've not seen these kind of drops since this time last year when it was the war, Russia and Ukraine. So oil absolutely dropped heavily this week. So we're seeing a 4 to 5 pence per litre increase in the diesel market. Can oil recover? One of the main reasons is Silicon Valley Bank, SVB, this 18th largest bank in the US, to go down under. This is the second bank in the history of US to actually fold. The first time that happened was Lehman Brothers back in 08, which caused the credit crunch, the financial crash, and this is the second bank. However, the Fed and a few other big banks have stepped in and sort of HSBC, I think, bought them out for £1 or something, and all the deposits were sort of covered. So all US customers' deposits were covered up to 250,000 per account. But yeah, that did not stop the turmoil. So last few days we've been absolutely risk assets got hammered badly. So this is the oil market. Moving over to sterling, looking at the 4-hour time frame, we kicked off at just 121.100. Again, not much happened last week. The sell-off, when it kicked in on Thursday, Friday, the dollar did drop quite significantly to 118.48. We've pushed back up then, so we kind of recovered again for the pound. It was the budget yesterday. On the budget, on the initial release, sterling did drop to 120.18, and again, we've not made much recovery since then. And that's pretty much it, really. For the diesel market, we will see a 4 to 5 pence, a big drop in the market. I just wanted to show you the chaos it's caused. So again, this is the Dow Jones, S&P 500. Everything's been sort of selling off quite a lot. And the dollar has been this is a daily time frame, by the way. Dollar has rallied the last few days. So yeah, the risk-off sentiment. However, but today, Credit Suisse as well was the second bank that was looking in a lot of trouble, and then they've received a cash injection of 40 billion from their central bank. So a lot of risk assets. This New York session this afternoon, the last few hours have sort of started to recover. So we're just looking at the Dow Jones on the intraday time frame on the 1 hour chart. It's kind of recovered quite a lot. So it is looking like a recovery. Next week, all eyes on the Fed. The Fed next Wednesday, I believe, is the FOMC, and that's gonna cause literally volatility like crazy. So depending on what the Fed does at 6 o'clock on next Wednesday, do they continue increasing rates? Do they stop? Do they look for a rate cut? End of the year, everyone's going to keep their eyes on the Fed. Depending on that, we'll see where the market goes. And then on Thursday, we'll see from the Bank of England if they are continuing raising rates with inflation at 10%, or if they're going to halt now. So a big week coming up next week. So very exciting. And that's all then. Join me again next week.